watch list. You know, first thing we'll look at that's been quite interesting recently has been the Nasdaq. So I'll zone in on that again. You know, we had been correcting into last week. We'd kind of carved out this low down here at sort of 10,700-ish level. I personally had a few bids a bit lower down at 10,550 and at 10,100. We didn't quite manage to get down there, and we've had quite a strong recovery over the weekend. So what triggered that recovery? We had some Chinese industrial profit data coming in, quite strong, about 20% increase in August. So you know, signs that the recovery certainly in Asia is looking a bit more robust. That triggered a bit of a broad risk asset rally. And then you also had, probably more importantly, Nancy Pelosi talking about the fact that a US fiscal deal might actually get done and before the election. And so the market's starting to discount some chance of getting a deal done in October. And obviously that is very much what the market is relying on, right? So if we get a fiscal deal passed somewhere in the order of $2 trillion, then we prolong the recovery, we put some money into people's pockets, and that's what the market's basically latching onto and hoping for, and that's what's going to drive the consumer or stop the consumer from collapsing, let's say, and that's going to take equity markets back up. So that kind of explains why we got this bounce up here up till now. So for me, you know, it's on the speculation that there may be a deal to be done before elections, whereas, you know, the talk was a bit tougher last week, and it was looking more likely that they were going to be in political sort of gridlock until after the elections, and then something might get passed. So more uncertainty, but you know, that kind of tone has changed a bit over the weekend, and so we've had this rally now. On technicals, you know, you'd expect this level here to act as some sort of resistance at around 11,550. If that breaks, you know, levels that I was looking at for resistance were around 11,800. And if that gets taken out, then we might have a real prospect of retesting the highs and going to new highs. So levels to watch would be 11,550 on the upside, and then again 11,800 for me. Another interesting point on the whole election story is that, you know, the volatility market, and I'll show you what I look at to gauge this. So the volatility market has basically priced in the fact that the election is unlikely to be resolved in early November. So the election date is like the 3rd of November, and you'd expect us to know who the president is, right, by the end of the day. That's not going to happen this time, because you've had the highest mail-in ballot ever, which basically means that, and generally it's the Democrats that do the mail-in voting. So what you may get is, at the end of election night, the Republicans have got a big lead, but a lot of votes are still to be counted that have been mail-in votes, and they will continue to be counted for weeks to come, even into Thanksgiving, right? And Thanksgiving generally tends to be towards the end of November. And by then, once all the mail-in votes have been counted, then the Democrats may have won in those major swing states, and they might have actually won. So it's highly unlikely that we're going to know the winner of the election until late November at the earliest. And given that, you are likely to see quite a lot of potential civil unrest in the US, where you've got the Republicans saying we've won, you know, and the Democrats are saying we're not going to concede until the mail-ins counted, and you might get quite a lot of disruption in the US and uncertainty lingering on for quite some time. That's certainly what the volatility. If you look at this, you can see the VIX term structure, right? This gives you a gauge for what the expected volatility is on the S&P for months in the future, and you can see you've got this hump in this November area. And what that technically means is that they expect the volatility to persist into the middle of November to middle of December time period. So that's effectively pushing the election date from early November to kind of late November, early December. That's where they're pushing the uncertainty to that point of the curve, because they don't think we're going to know the result for a while. Yeah. So now what do we do on the back of that potential uncertainty? I think the obvious trade on that is probably dollar weakness. So, you know, whereas equities might be sort of toing and froing and a bit undecided and not really knowing what to do, I think you may have a situation where the DXY, and we can have a look at the chart on the DXY, that's had a bit of a bounce recently, right? And it's reached an important level and it's kind of rejected that level. And I think if you're going to see dollar weakness resume, then, you know, that type of, you know, civil unrest, uncertainty lingering on scenario is not going to be good for the dollar. So you see here, we reached lows on the dollar of around sort of 92-ish, just under 92. We had a good bounce to sort of 94.7, and that was pretty much coincidence with this level here. So that level there, which acted as resistance. So, you know, it's a good level to reject from, and, you know, we may have another test of it over the coming week or two. But if that level holds and we don't really get ourselves above 95 on the DXY, and then we go into the election period, which we can now fairly confidently say is going to be full of uncertainty for some time, then dollar weakness may resume, and you might get a really nice shorting opportunity in dollar from these levels if they get touched again, basically. So that's certainly on my radar. Other ways to express that might be to buy the euro. As you can see here, euro bottomed out about 116. If it retests 116 over the next week or two, it may be a nice setup to like buy euro, or even buy some options, buy some call options on euro to try and play a move back towards the top end of the range around the 120 area. Right. I had a few levels last week that were triggered on silver. So if we bring up the silver chart. So here we had, you know, based on the impulsive rally that we saw, you know, into early August, I was looking for the correction to test these blue horizontal lines. These were my levels in silver. And I had 23.10, 22, and 20.7, roughly my levels. So we hit level 1, we kind of chopped around, then smashed straight down to level 2, recovered back to the original level, and now we're kind of bouncing and holding off that level. So I've been trading those levels, picking up clips at each level. I managed to flip that one once over, lock in a bit of profit from the move, and I'm still long from my original purchase at this support level. So I'm looking for silver to at least recover back to $26 over the coming sort of months. If it does have a retest to the downside, I will be scooping it back up at 22 and again at 20.7. I feel like as long as it holds above the $20 level, then I think these supports will be the places to accumulate, and we will see a retest back towards, you know, those highs of 28 to 30 at some point in the coming months. If we do smash through 20, then the game starts to look a bit different, right? And you could argue against some of the Elliott wave picture and scenarios that suggest that this is just a correction, and it may turn into something much deeper. So I'd be accumulating at these support levels with a stop somewhere below the $20 level. So I think that's how